The lender fees worksheet provides a detailed breakdown of the upfront closing costs and expenses associated with a mortgage. A lender is not required to provide you with a lender fees worksheet by law, but will likely provide it if you ask. We like the lender fees worksheet because it provides more information in a simpler manner than documents the lender is required to provide to borrowers by law when they submit a loan application, such as the good faith estimate and truth in lending statement. We recommend that you request a copy of the lender fees worksheet when you submit a loan application and request a mortgage proposal from a lender. One of the best things a borrower can do to make sure they are getting the best terms for their mortgage is to gather and compare mortgage proposals from multiple lenders. You can use the lender fees worksheet to perform a more detailed review of mortgage closing costs and to compare different lender proposals. I'm going to walk through an example lender fees worksheet for a home purchase mortgage. In this case, we're getting a $380,000 30-year fixed-rate mortgage with an interest rate of 4.250%, which is noted at the top of the fee table. Next, we have the fee table, which lists the various closing costs, fees, and expenses the borrower is required to pay when the mortgage closes. The first category is origination charges, which are the fees charged by the lender to process and close your mortgage. Different lenders use different terminology for their fees, and sometimes you see terms such as origination points, underwriting fee, commitment fee, funding fee, or administration fee. These are all different ways to describe lender fees, and all lender fees should be listed under origination charges. In this case, we're showing an underwriting fee of $995 and a wire transfer fee of $75. The next category is other charges. These are the non-lender closing costs the borrower is required to pay at closing. These first four items are services that the lender typically selects and bills the borrower for, but then pays third parties to perform the services. First, we have the fee for the appraisal report, which is an assessment of the value of the property we are buying provided by an independent appraiser. Next is the credit report fee, which is a fee to pull a copy of your credit report. The tax service fee is a fee to set up an account with the tax service company so the lender can make sure you pay your property taxes. The flood certification fee is a fee to make sure that the property you're buying is not located in a floodplain. There may be fees for additional reports required by the lender, but this gives you an overview of some of the more common fees. Next, we have the closing cost items that are paid directly to the service providers. The closing or escrow fee is the fee charged by a closing agent, such as an escrow company or real estate attorney, to process and close your mortgage. Escrow companies are typically used in the western U.S., and real estate attorneys are typically used in the eastern U.S. The borrower has the ability to select the closing agent. However, the choice of closing agent is typically made by mutual agreement between the buyers and sellers' real estate agents. The notary fee is charged by a notary hired to notarize your mortgage documents. Next, we have lender's title insurance. In most cases, the borrower is required to pay for title insurance for the lender to make sure that there are no exceptions or issues with the property's title, which is the legal document that records a property's ownership. Similar to selecting the closing agent, the choice of title company is typically made by mutual agreement between the buyers and sellers' real estate agents. Additionally, in some areas of the country, including parts of New York State, buyers and lenders do not obtain title insurance, but instead rely on a real estate attorney to provide an opinion on the property title. Next, we have the fees for pests and property inspections that a borrower can decide to have done to make sure that there are no significant issues with the property, such as termites or structural issues. Although these inspections are optional for the borrower, they are highly recommended when you purchase a home. The borrower, usually with input from a real estate agent, selects the companies to perform these services. Next, we have the mortgage recording charge, which is the fee charged by your local government to document your mortgage and property purchase. The next item is daily interest charges. As part of your closing costs, you're required to pay the lender interest charges from the day your mortgage closes until the end of the month in which your mortgage closes. In this case, we are showing our mortgage closing on the 15th, so we are required to pay interest for 16 days. Keep in mind that this figure is an estimate because it's hard to predict when your mortgage will close, and the final figure will depend on the actual date your mortgage closes. Next, we have the cost for hazard insurance, which is also known as homeowner's insurance, which is insurance against significant property damage, such as from a fire. Borrowers are required to purchase homeowner's insurance when they get a mortgage. The borrower can choose the insurance company and policy as long as the policy meets the lender's requirements. In this case, we're buying a one-year property insurance policy for $475. The next item is the property tax we are required to pay at the time our mortgage closes. This is the partial or prorated amount of property tax due based on the time of year your mortgage closes and when your property tax is due. In this case, we are required to pay property tax for 3.5 months. This figure is an estimate, and the actual figure will depend on the date your mortgage closes. At the bottom of the page on the left side, the worksheet shows the total amount of money the borrower needs to close the mortgage and purchase the property. In this case, the property purchase price is $475,000 and we're making a down payment of $95,000, $5,000 of which we have already paid in a deposit. So if you add $90,000, which is the amount of our down payment that we still owe, to our total closing costs outlined at the top of the worksheet, which is $7,305, the total amount of money that the borrower needs to close the transaction and purchase the home is $97,305. In short, this is the amount of money coming out of the borrower's pocket when they buy the property. Finally, the right side of the bottom of the page shows the monthly mortgage payment, which is the principal and interest item, as well as estimated monthly homeowners insurance and property taxes. Adding these figures together equals your total monthly housing expense, which is also known as your principal, interest, taxes, and insurance, or PITI for short. Please note the property tax and homeowners insurance expense vary by county and property, so this is an estimated figure. Additionally, you typically pay your property tax twice a year and your homeowners insurance premium once a year, but this table shows these estimated costs on a monthly basis. Depending on your loan-to-value ratio, which is the ratio of the amount of your mortgage to the value of the property you are buying, and what type of mortgage program you select, you may be required to pay mortgage insurance to protect the lender in the case of default. Also, most condominium complexes and some housing developments charge property owners monthly homeowners association fees, also known as HOA or co-op fees, for the maintenance and upkeep of the project. Although these items do not apply to our example, both will be listed in the table on the bottom right of the worksheet and included in the total monthly payment, if applicable. We encourage you to review related freeandclear.com videos, such as our good faith estimate and truth in lending statement overviews, as well as the Home Purchase Mortgage Guide on freeandclear.com. Thank you for reviewing the Lender Fees Worksheet Overview with freeandclear.com. freeandclear.com